If you have a high-paying full-time job, short-term rental investment may be the fastest way to achieve financial freedom. 90% of millionaires attribute their wealth in part to real estate holdings. Thanks to Airbnb, you can increase rental income from your investment property. Real estate is all about location. So today, I've ranked 12 cities in 4 different tiers depending on how much wealth it'll bring it to you in 10 years. Where did I get the list? I choose the markets that other short-term rental YouTubers and bloggers claim to be the best Airbnb markets in the US. How much will you make from this investment in 10 years is the primary factor for ranking. I call this 10 years ROI. This 10 years ROI comes from the short-term rental revenue and home value appreciation. This ROI number assumes that you'll not take any mortgages, so you're going to pay the entire home value price as an initial investment. I use 2023 years data for the home value and the short-term rental profit, and I use the one-bedroom house for these rankings. So I used a model that predicts next 10 years home value appreciation based on historical property price, population, and income changes. I'll not go into details about this prediction model, but you can find this in Airbtics app. Here is one example on how this model works. If average home price has been increasing rapidly, let's say 15% a year, but total population and average income are not growing as fast as the housing price, then this model will correct the home value appreciation rate to be lower than the past years. So home value was appreciating for about 15% a year. We'll predict that next 10 years it's going to maybe appreciate around 7% per year. If you invested in S&P 500 in 2013, in 2023, after 10 years, your return on investment would have been 220%. So if your investment did not generate more than this, I'll put this into this should have invested in S&P 500 tier. And if your investment is even lower than this, then we'll put this in ramen profitable. You'll make too little from your investment that you need to eat ramen. And the congrats tier, this is a relatively good market, 300% return. To the moon is the top market for short-term rental investment in the US. So let's start with 3 mountain destinations. I recommend you to do an Airbnb in a place where you'd like to visit once in a while. So this can help or even push you to make time to do your hobby. So if you like snowboarding or hiking, investing in a mountain destination can be an exciting option. The downside is that it'll be hard to find the long-term or mid-term tenants when the short-term rental demand goes down. But the local governments are short-term rental friendly because tourism is usually their major industry. There's a very little regulatory risk. Gatlinburg is a gateway town to the Smoky Mountains. It's 3 to 4 hours drive to Nashville and Atlanta. You need to get a short-term rental permit and maintain certain conditions to be an Airbnb host here. This kind of regulation, I think, is good for short-term rental industry in the long run. Average home value is $480K, which is quite expensive, and you can expect to make about $40K per year. Net rental yield is only 5%, so this market seems to be getting too much saturated to do an Airbnb. 10 years return is little less than 200%, so for me, it's not a good market. So it goes to the S&P 500 tier. Flagstaff is a gateway town to San Francisco peaks. Another similar town is Savannah. Each 3 to 4 hours drive to Phoenix. This city doesn't get as warm as Phoenix due to high altitude. This place is getting popular rapidly these days. Their average property price is $325K, slightly lower than Gatlinburg, but Airbnb revenue is also lower than Gatlinburg, which makes both cities to have the same net rental yield. This isn't a good sign, so this also goes to should have invested in S&P 500 tier. Joshua Tree might be your place if you are looking for some wilderness near Los Angeles. It's where the two desert ecosystems meet, the Mojave and the Colorado. The net rental yield is slightly higher than the previous two, each 6%, each due to the high average daily rate. Things became more expensive in California these days. So 10 years return is slightly higher, but still, I can't call this a good market. So again, it's gonna go to the S&P 500 tier. Now we'll go through rural and suburban towns. You can usually find the cheapest properties in these kind of the areas. These are the ones without major tourist attractions like ski resorts or Disneyland. There are some rural areas with good short-term rental demands, and each for work like traveling nurses or construction workers, or sometimes college student families. They're the Airbnb guests. I believe rural and suburban areas tend to be the best markets for high return investment. So let's start with Green Bay. It's a rural town known for the Green Bay Packers. It's in Wisconsin, very peaceful state. I just included it here in this list because I went to high school here for 6 months. People use Airbnb here for business trips or to visit their families, and very occasional travelers are using the Airbnb here as well. Average property price is really cheap compared to the mountain destinations earlier, just a little bit over than $100,000. As you can see, the average occupancy rate is a lot lower than mountain destinations. It's only 42% compared to 60 to 70% range in mountain destinations. Still, the yield is strong. This market gives 260% return, so it goes to a finally congrats tier. South Bend is another suburban town in Indiana, and it's a home for Notre Dame University. It's 2 hours away from Chicago International Airport. So the two main industry here is healthcare and education. So you can expect to receive traveling nurses and college student families as your guests. The average property price here is noticeably cheap. The average property price is only $75K, so you can buy 7 properties in South Bend for the price of 1 property in Gatlinburg. Average net rental yield is 19%. We expect an average short-term rental to give back 360% over 10 years. This goes to the moon tier finally. But what's the catch in this kind of the amazing market? So their population is actually growing very slow. Alright, let's move on to the Columbus. Columbus is a suburban town in Georgia. To do short-term rentals here, you need to apply for a vacation rental permit. The city seems to put heavy effort in bringing more tourists. There are some good museums like Columbus Synchronous Orchestra and Columbus Museum. What's really amazing here is the property price. You can often find homes that are for sale below $50K. You can expect $19K a year in Airbnb revenue, which is really huge for these cheap property prices. It has 71% average occupancy rate. The 10 years ROI is 370%. Wow. Of course, this one goes to the moon tier again. So now let's move on to the coastal towns. These kind of towns attract year-round visitors, whether it's for beach or for fishing or for jobs. So for these many reasons, the housing prices usually on a more expensive side near the coast. But the short-term rental revenue is also very, very high typically. So let's take a look on Savannah. What's noticeable here is the high average Airbnb rental revenue. It's $43K per year. The average daily rate is $163 per night. And among the cities that we reviewed so far, this is the highest number for the average daily rate. Property price isn't too expensive neither. It's just about $200K. This gives 316% return in 10 years. So it goes to the congrats tier. Miami. Miami is one of the most known vacation destinations, attracting huge number of international travelers. And more and more businesses are opening branches in Florida as well, in Miami specifically, such as Goldman Sachs and Blackstone and many other more. It has good international airport serving flights to cities in Latin America and Europe. Net rental yield is about 8% in Miami, each 3% lower than Savannah, the earlier city. Compared to Savannah, Miami has higher property price and lower average Airbnb revenue. Even though it sounds exciting to have a vacation home investment in Miami, the ROI just isn't that strong. So this goes to S&P 500 tier again. I'm so sad. Santa Cruz is a nice surfing town for someone based in the Bay Area, Silicon Bay Area, I mean. When I was working at Facebook, now Meta, I heard someone commuting from Santa Cruz to Menlo Park Meta office every day. He bragged that the 17 highway has nice scenic view. Properties in California are just way too expensive for good ROI. The average property price is $563K. The population is decreasing here as well. This seems to be part of the trend that Californians are moving to Texas for lower living costs. Anyways, you're expecting to make a little less than 200% over the next 10 years. So from an investment point of view, it's better to put money on the S&P 500. But if you frequently visit Santa Cruz and spend time there, maybe it might be worth it. So are you ready to now review the urban destinations? So urban attracts people. Property value increase a lot faster. Things are always happening. Short-term rental yields tend to be on a lower side due to high property prices. But it's a lot easier to buy and sell a home. There's always demand for the long-term rentals, but there's a high short-term rental regulatory risks. More and more cities are enforcing new short-term rental regulations every month, just like New York City and Dallas. San Francisco is one of the most expensive cities to live in the US. There are numerous amount of high-tech companies. Even Airbnb's headquarters is here. A lot of high-paid tech jobs, year-round good sunny and cool weather. I visited there quite a few times while working for Meta. I really love the city and vibe. However, just like New York City, they've been cracking down Airbnb hosts. You can only run on Airbnb, I think 90 days a year, and you need to be a resident in San Francisco. Some hosts bypass this law, but their fine is very heavy. I wouldn't personally risk that. The average property price is $810K, but you can't make much from Airbnb neither. This data says you can make $41K per year only, but this assumes you put your listing available for 365 days a year. So if you only run 90 days per year, it's going to be like $10,000 per year. And it's just not possible to do that. So sadly, I put these two first ramen profitable tier. Seattle allows one secondary home to be letting out as a short-term rental. If you're looking to diversify your short-term rental investment portfolio, Seattle can be a good urban option as well. The situation here is slightly better than in San Francisco. The property price is much cheaper and the short-term rental demand is high. See the average occupancy rate. It's 77%. It means a typical Airbnb would be booked for 23 days a month. What's great here is that the people are moving a lot. This trend is likely to continue. And property price is predicted to rise even faster. As a result, 250% return. So it goes to the S&P tier again, but it's so far good as an urban destination. Another caveat is you can only own and run one Airbnb in Seattle. In Chicago, you need to apply for a short-term rental permit, and the process is quite straightforward. This puts this city in a better position than Seattle and San Francisco. I think Chicago is a great place to live. Good job opportunities, and still very cheap property prices. The home value is very cheap in Seattle. The net rental yield is super high for that reason, but it looks like we can't expect high property appreciation. With 217% 10 years ROI, sadly, it again goes to the should have invested in S&P 500 tier. Houston doesn't have a strict Airbnb regulation, but recently, Dallas banned short-term rentals in residential areas, so it's a matter of time for Houston to start short-term rental regulation. The numbers look similar to Chicago, but with a little higher home price forecast and little lower net rental yield. There's a regulatory risk, so this market goes to the S&P 500 tier.